Hi, welcome back to Lipper's Fund Flows Insight. I'm Jeff Turnahoy. For the week ended November 12, 2014, the conventional mutual funds industry saw net inflows again this week. Let's take a look at our macro groups and see where the activity was. Starting off at the top, equity funds posted the only outflows for the week at about $1.9 billion. Taxable bond funds again showed more inflow activity, $3.8 billion this week. Munis also had inflows, about $500 million, and money market funds rounded out the list with inflows of $4.6 billion. Well, overall, it was a fairly quiet week for the market, other than we kept notching gains day after day for a few days during the week, where the S&P 500 and the Dow Jones Industrial Average both notched record points. So with that backdrop in mind, let's take a look at equity funds. Again, despite some record closes on Wall Street, mom and pop investors just couldn't get behind the rally. Maybe they're suspecting it's long in the tooth and due for a correction. But despite 4 positive weeks of good performance, it's now sliding off a little bit. The S&P 500 and the Dow Jones, again, at record territory, couldn't persuade investors to drop any money into the market. We saw multi-cap value funds kind of lead the outflow parade with $866 million. S&P 500 funds, interestingly enough, so index mutual funds that track the S&P 500, recorded one of the best weeks that they've had in a long time. They took inflows of over $400 million. I'm sorry, close to $300 million. Other than that, there weren't too many bright spots to record. We saw that emerging market and long-short funds were next after S&P 500, but their inflows were roughly $200 million each. Let's turn our attention now to equity ETFs. This group had a much better week with inflows of about $12.6 billion as institutional investors decided to focus their gaze on the markets and what was in front of them. Well, the S&P 500 had inflows of $5.6 billion. No surprise there. It's usually the leader on this parade. The core S&P, IVV, it had inflows of $824 million, which is pretty good because this one often goes in the other direction than SPY. The Midcap 400 ETF had inflows of $596 million, which is pretty good for it. At the bottom, we saw that financials and gold tended to see outflows during the week. We saw GLD take its 12th consecutive week of outflows. This fund has had a tough time attracting money, and the outflows really began in January of 2013. So going on 2 years of just week after week of outflows on GLD, it's about a third the size it was about 2 years ago. The next group to take a look at is taxable mutual funds. Here again, $3.8 billion in inflows was a solid week for them. Inflation is relatively calm these days. We saw a modest Treasury rally during the week, and corporate spreads were relatively flat, not too much to speak of. Core bond led the inflows with $1.7 billion. Investors were also looking again at high yield, which they've done for the last few weeks, $797 million in inflows for that group. But at the other end, there weren't too many outflows to speak of. We saw loans continue to have trouble with investors. They had outflows of $366 million, so still tough times for loan funds. Ginnie Mae funds weren't much better. They had outflows of about $200 million. Well, let's take a look at their ETF brethren. Fixed income ETFs had modest inflows this week, about $1.2 billion. Interesting one this week was the First Trust Investors Enhanced Short Maturity ETF, or FTSM. It had inflows of over $1 billion this week, which was huge considering that 2 weeks ago it had assets of only $6 million. So somebody's taking a long, hard look at this product and putting their money where their mouth is. After that, we didn't see a whole lot of activity. I mean, TLT had inflows about $380 million. At the bottom, the ticker on this one should be BIL, the S&P 1 to 3 month T-bill, had outflows of just about $300 million. So overall, a pretty good week for fixed income ETFs. Despite their smaller assets, some of these products are attracting a lot of attention. Next group to look at is mutual fund municipal debt money market, municipal debt funds. We'll get that one right one day. Inflows this week, about $500 million. The performance in this area has been soft over the past 4 weeks, just a handful of basis points to show for it. over the last 2 weeks. So overall, not a whole lot of reasons for investors to get excited over munis other than there's still a good yield play. Intermediate munis took in the lion's share, about $378 million. Short munis took in $95 million. Then after that, there's just a handful of spots with some inflows, not too many outflows to speak of. So munis are still looking pretty good to a lot of investors out there. Final group to look at is money market funds. Again, they had about $4.6 billion in inflow this week. Not much about this to speak of. It seems par for the course. Retail investors were pulling money out. They took about $4.7 billion off the sidelines, but that didn't matter because institutions added about $9.3 billion. So a little more money going off to the sidelines this week. We'll see where it ends up later on. Well, that'll do it for this week's analysis. Join us next time where we'll discuss flows from mutual funds and ETFs. Join us online as well at lipperusfundflows.com, and we'll see you here again next week. Thanks for watching.